Ladies and gentlemen, with the market looking so bearish, or what could potentially be the beginning of quite a significant bearish move, let's go through some individual shares and look for some trade opportunities or what appear to be slowly presenting themselves in the way of money-making opportunities if in fact this market rolls over bearish. So what we'll do, we'll begin with ticker symbol BIDU. This, of course, is BIDU. We have our bearish trade set at 147.46. This could be a little bit of a symmetrical triangle, a little bit of a false break. There's no volume supporting the bullish side of it, so we could see a very quick reversal, and a close below 147.46 is going to end in a very quick trade down to $140 a share, more or less, give a few. Caterpillar did trade or trigger last night. Congratulations on students in that individual trade. I did cover that in a previous video. What we'll do is we'll talk about FAS. FAS looks poised, absolutely poised to move lower. You can see as of today, Tuesday, we have what we call a little bit of an inside day, almost a bearish engulfing candlestick pattern. This is very, very bearish. You can also interpret this as a tweezer top. Candlestick at a resistance level. We've got all the initial stages of a potential rollover, a retest of this old support as new resistance, which is holding. Everything looks so incredibly bearish on FAS. All we need is a closing continuation below 85.08. Then the bottom is going to fall out of this ETF, one which tracks, of course, the financials. Google, a little bit of a false breakout. What you can think of doing is begin bringing down your bearish entry to about $520 a share. That will be below the exponential moving averages, below this little bit of support swing low, and a very, very quick trade down to about $510 a share. So if you want to make a quick $10 on those intrinsic value of the put options, then Google's a very good candidate to do that. Maybe this week, definitely next week. Now, HD came out with earnings on Tuesday. That's fine. Had a little bit of a gap up, a bit of a high wave spinning top. Very nice volume. You'd expect that with earnings. You can see a little bit of a gap here between Monday and Tuesday session. Really not a whole lot to take away from HD other than the fact that it's gapped simply right into the middle of this larger channel. So there's no real trade set up in HD. Generally, we like to trade in the direction of the open window. That, of course, is bullish in this case, but we do have an overhead resistance level, about $80 a share. So you can't get too carried away on HD at the moment. Just give it some time before we shake out, obviously, the buyers and the sellers, and we get one clear directional winner. And of course, price is going to move in that direction. Here's JPM. JPM looks as if it's just holding on at the support level. If we flinch below $52.90 a share, this is going to be a fantastic shorting opportunity down to support, down around $51 a share on JPM. A very quick move if in fact that does occur. So JPM is definitely on my radar. Netflix, not a whole lot to talk about. Starbucks, very, very sideways, very, very neutral. Look at these Bollinger Bands, very, very tight, squeezing, contracting price. This is going to explode very soon. You can see my two orders, 69.02 and 72.09. XOM, pulling back into resistance as old support or as new support. And again, we haven't done anything. We could be setting up a little bit of a stair step to break down, but we do have our bearish trigger at $99.08 a share. That will conclude us in this video, and that's really going to conclude us, for Tuesday. If you like this analysis, have a look at our website if you want to learn more. All the best, everyone. I will catch you during the week. Goodbye.